welcome back. Boy, I did 100 one-arm push-ups. That was easy. All right. So let's cover Part C, uninsured motorist coverage. All right. It pays for medical treatment related to bodily injury caused by an at-fault uninsured motorist. So someone else causes bodily injury to you while they are operating a vehicle. They are at fault, but they are not insured. Okay? Okay? Or you don't catch them. It's a hit and run. You're covered by your uninsured motorist coverage. Okay? Okay? Whatever the case, there is not insurance available to cover your injury. Okay? All right. So what has to happen? Okay? So in some cases, property damage is also covered in addition to bodily injury. The uninsured motorist must be legally liable. So it has to be proved that you were not at fault. Okay? And please note that about half the states in the U.S. require people to have uninsured motorist coverage to protect themselves from people who are driving around with no insurance or inadequate insurance. Okay? Or by an insurance company that becomes insolvent. All right. So who's covered? Well, the named insured on the policy and all family members on the policy. Another person while occupying the covered auto. Any person legally entitled to recover damages due to the injury of a covered person, like a parent or a spouse. A parent of a child who is injured or the spouse of someone who is injured they can recover from the insurance company. Okay? Does not apply when an insured is injured. Okay? Because or by a vehicle, I'll straighten that out in just a second, or by a vehicle owned by the named insured, but not under the insured policy. So let's look at that for a second. Coverage does not apply, uninsured coverage does not apply when an insured is injured in or by a vehicle owned by the named insured, because you can't insure yourself. That's why. Okay? And you have medical coverage. There's a section of medical coverage, so uninsured does not cover this, because another section of your policy does cover that. All right. There is primary coverage. If there's primary coverage under another policy, you're not covered. And once again, if you're using the vehicle as a business, you have to have a commercial policy. So coverage, uninsured coverage, does not apply when the insured is injured in or by a vehicle owned by the insured but is not insured under the policy. Okay? Or if there's primary coverage under another policy, or you're using your vehicle in business. Not covered. Okay? And you're not covered if it's a work-related injury and you're covered by workers' comp. Then uninsured doesn't kick in. All right. Limitations when more than one uninsured motorist coverage provision applies to a loss. So let's look. So some of these things get really confusing. It's best to look at an example. All right, if an insured is injured by a negligent driver, so you have a policy and someone injures you, okay, and you are riding in someone else's car, the owner of the car in which the insured occupies also has coverage. The insurance provided by the non-owner's company is excess over the insurance provided on a primary basis by the insurance company of the car owner. So once again, if you're in somebody else's car, and we've covered this already, your policy will follow you, but only on an excess basis. The car owner's policy covers you on a primary basis. All right, Jeff and Ann each have uninsured coverage. Jeff is injured by an uninsured motorist while riding in Ann's car. Whoops. Ann's policy is primary and Jeff's policy is excess. Okay? So I think that's become pretty clear as a pattern as we've gone through this, that your policy will follow you, but only in an excess basis if you're riding in someone else's car. Okay, underinsured motorist. That's different than uninsured. Underinsured motorist coverage can be added to provide protection. Okay, so you have someone else, you have an accident with someone else who's at fault, and that person is covered but does not have adequate insurance. Okay, and so this covers a gap between the minimum amount of the insurance policy less the amount paid by the negligent driver's insurer. So if the negligent driver does not carry enough insurance to cover you, okay, then your insurance will kick in as excess. All right. So this is typically a rider or an endorsement. It's a specialty item that's added to your insurance coverage, and it's just to make sure that you've got complete coverage. All right? So this is something you talk to your insurance agent about. Is it mandatory in your state or is it optional in your state, this underinsured coverage? I think it's a good idea unless it's really expensive. All right, now let's look. So we're going to go through to slide 29. Let's look at Part D, coverage for damage to your auto. Okay, this is, again, as I mentioned at the beginning of this chapter, this is what happens most frequently, damage to your auto. All right. So the insurer agrees to pay for any direct or accidental loss to a covered auto or to any non-owned auto being used by the insured. So you're either driving your car or you're driving someone else's car. Okay? A non-owned auto is a private passenger vehicle or trailer not owned or made available for regular use. That's the important thing, regular use. Okay, you're covered. Okay? Now, if the damaged car is borrowed, not owned, the insurance coverage is excess over the primary insurer. Okay, so if you borrow a car, let's look and see if we have an example of this. We don't have that. All right, so once again, if you're not in your car, it's the same concept that your coverage follows you, but as an excess. All right, two autos are covered under the same policy, are damaged in the same accident. You only have to meet one deductible to fix both cars. You'll see that on licensing exams, this question. So if you and your wife have an accident, both cars are damaged, okay? Both cars are covered on one policy, then you only have to meet one deductible. Okay, you don't have to pay both deductibles. However, if the deductibles are different on the two automobiles, you do have to pay the higher deductible, of course. All right. So a collision is defined as damage to the named automobile or a non-owned auto as a result of its impact with another vehicle or with a stationary object. Okay? All right? So you have an auto that's covered by your policy, you're the insured, your auto is named, or you are borrowing an automobile, and as a result of an impact with a vehicle, there is property damage. Okay? Collision losses are paid regardless of fault. Okay? If there is fault, the insurance company will pay, but then it will go after an at-fault driver. Okay, but they'll pay first. So this is a very key item for collision or damage to your auto. Okay. The collision must occur while the vehicle is being operated, except a collision with an animal, or is caused by another vehicle while the damaged vehicle is not operating. Okay? So the vehicle has to be in operation, okay? Or it has to be hit by another vehicle. We're going to look at some examples, I think. All right. So, we then have this thing called comprehensive, other than collision. So there are two types of property damage that happen to your car. One is property damage that happens while you're operating the vehicle, or the vehicle is stationary, but it is hit by an animal, or it is hit by another vehicle that is operating. Okay? Now, then we have comprehensive, okay? And your vehicle is damaged from falling objects like trees, limbs, rocks, building parts, weather like hail, okay? Water, which is flood, wind, okay? Okay, so all these things are called comprehensive. Comprehensive. Most people have collision. Some people decide not to get comprehensive. If you decide not to get comprehensive and one of these issues happens, you're not covered. Let me give you a piece of advice. Always check to see how much comprehensive is. It's usually pretty inexpensive. If it is inexpensive, then you should have it. What do I think is inexpensive? If it costs you less than $75 a month, then I think you ought to have comprehensive. Okay? And typically it'll cost you a lot less than $75 a month to have comprehensive. Typically it'll cost you like $20 a month maybe to have comprehensive. Okay? At the most. All right. So all these things. Now I will tell you this. You've got a deductible. Okay? So you have to decide what your deductible is going to be if you want comprehensive. All right, Part D, collision to your auto, will pay for temporary transportation expenses like train, bus, taxi, or rental car expenses while your car is being repaired. Okay? But there are some limits to it. You can't go out and rent a Maserati. All right? Whoops. Okay. So if you and this happened to me, I ran into, or actually had a deer run into me, ran in front of me, and I hit it while I was on a business trip, and I rented a car, and the rental car company, I was in a rental car, and it took them 2 weeks to fix the car that was damaged, and they charged me for the daily rate times the number of days the car was out of commission, and my insurance company paid it. All right, towing and labor costs, part of comprehensive. Okay, but labor is only paid. And this is again a question you'll see on a licensing exam. Labor is only paid if the repair is done where the breakdown occurs. So you can have towing coverage, okay, but chances are, unless it's just something very simple to fix like a battery or a flat tire, the labor is going to be incurred in a mechanic's shop, and that's not going to be covered by your comprehensive. Okay? Oh, battery's not covered. You run out of gas, they're not going to pay for your gas. All right. So you go to rent a car. Rental car companies call the insurance they try to sell to you on a rental agreement a collision damage waiver. That's what they call it. If you carry collision and comprehensive, then you probably do not need their collision waiver. So here's the thing. Call your insurance agent before you go on a driving trip or before you rent a car and ask that agent if you should take out the damage waiver. Okay? It's usually $10 or so a day. Some credit card companies offer you coverage if you use their card when you rent a car, so you need to check on that. If you're using American Express or if you're using a MasterCard or Visa, ask the credit card company, the issuer, if they have this coverage that is a part of using your card. Okay? Don't forget that. That's a tip. All right. Exclusions to the coverage. Same exclusions. Commercial. Okay. Damage to wear and tear. Mechanical or electrical breakdown. These things are not covered by comprehensive. Uh-oh. If a nuclear bomb is dropped, you're in trouble. Okay. Electronic equipment not permanently installed. Okay. If it's permanently installed, you're good to go. If it's something you've attached, not covered. Okay. Boy, if law enforcement gets a hold of your car and they damage it or confiscate it, you're not covered. Okay. Trailers and camper bodies are not covered by comprehensive. You need a separate coverage. There you go. Part D is excess coverage if you damage a borrowed car. Okay? If you damage a borrowed car, your comprehensive is excess. All right. If your car is stolen for the first 48 hours, which is 2 days, the rental coverage for a substitute car is not covered. Okay, and that gives it 2 days to recover your car. After the second day, then you can start using your comprehensive to pay for a rental car within limits. All right. Let's look at limits of liability. All right, so for a total loss, the policy will pay the actual cash value less the deductible that you have. For a partial loss, the policy only pays the amount necessary to restore the damaged property using parts of like kind and quality. And note that insurers can use generic parts. If you have damaged parts that have to be replaced, they can use generic parts, but they have to let you know that. You can pay up to ensure that branded parts only are used in your car, and it's very expensive to repair damage. So be careful with using branded parts or generic. You're going to have to talk to the body shop and make sure that they're being honest with you about the quality of the parts that they're using. All right, if the cost of the repairs exceeds the actual cash value, the insured will receive the actual cash value from the insurance company. And this is what happens when a car is totaled. That means the insurance company has determined, the adjuster has determined, that it will cost more to fix the car than it will be to junk the car. So at that point, they will give you the actual cash value of the vehicle. Okay? All right, so the insurance company can add an endorsement that excludes coverage for diminution in value. Okay? So this means even if your car, so if your car is involved in an accident, that goes on a Carfax report. And the value of your car, even though your car has been fixed, the value of your car will be impaired. Okay? So talk to your insurance agent about this coverage for diminution in value. All right. The insured can also purchase gap insurance to cover any difference between actual cash value and an outstanding loan. And this is really important today. So if you go out and buy a car and you take out a loan that is long-term, I would say in excess of 4 years, okay? Particularly in excess of 5 years. What happens is the value of your vehicle will depreciate faster than the amount of the outstanding loan that is amortized. Therefore, you could have an accident that results in your car being totaled, and you be given a check for actual cash value for your car, and the check that you receive is less than the amount that you owe to the bank for your vehicle. This is called a gap. And you can take out an insurance policy that will cover that gap. So I would, if you're going to buy a car and take out long-term financing, more than 5 years, then I would definitely look into gap insurance. And if you're going to lease a car, you might check out gap insurance for a leased vehicle as well. Really important. Otherwise, you could get stuck with having no car and still owing the bank money. All right. So there's an appraisal provision for handling disputes over the dollar amount of the physical damage loss. So what happens is you might get a body shop that says it's going to cost $6,200 to fix your car, and the adjuster says no, it should only cost $4,800. So you have to go through the process of resolving that dispute. Okay? The insurance company or you can demand an appraisal of the loss. Okay? All right, so the insurance company can either pay you in cash or they can pay the repair shop for the repair. Okay? And the insurance company, once they pay up, they have the right to the damaged property. So if they total the car, then they get the vehicle. You don't get the vehicle. You don't get to junk the vehicle. All right, duties after an accident or a loss. What are you responsible to do? All right, after an accident, the insured is required to perform certain duties, such as notify your insurance company or agent. If you have any type of incident, your first call is to the police, your second call is to your insurance agent. Check the time and the place, okay? The insurance company is going to ask you to participate in the investigation.